On October 29, 1929, the world witnessed one of the most dramatic and devastating events in financial history, the stock market crash of 1929. The crash wiped out billions of dollars of wealth, triggered a global economic depression, and changed the course of history. But what really caused the crash? And was it a natural consequence of market forces, or a sinister plot by powerful elites to manipulate the masses? In this video, we will explore the facts, the myths, and the mysteries surrounding the 1929 crash, and reveal some shocking secrets that you may not have heard before. We will also examine the impact of the crash on society, culture, and politics, and how it shaped the world we live in today. So buckle up, and get ready for a thrilling ride into the past, as we dissect the 1929 crash. The Roaring Twenties. To understand the 1929 crash, we need to go back to the decade that preceded it, the 1920s. The 1920s, also known as the Roaring Twenties, were a time of unprecedented prosperity, innovation, and optimism in the United States. The economy was booming, thanks to the rapid growth of industries such as automobiles, radio, movies, and consumer goods. The stock market was soaring, as millions of Americans invested their savings in the hopes of making a fortune. The culture was vibrant, as new forms of music, art, and entertainment emerged, such as jazz, flappers, and the Harlem Renaissance. The society was changing, as women gained the right to vote, urbanization increased, and immigration diversified the population. But beneath the surface of this dazzling decade, there were also signs of trouble. The prosperity was unevenly distributed, as the gap between the rich and the poor widened. The economy was unstable, as the growth was fueled by credit, speculation, and overproduction. The culture was restless, as social tensions, moral conflicts, and political scandals erupted. The society was divided, as racism, nativism, and prohibition fueled violence and resentment. The crash. The stock market crash of 1929 was not a single event, but a series of dramatic declines that occurred over several days in late October. The first sign of trouble came on October 24, 1929, also known as Black Thursday, when the Dow Jones Industrial Average, DJIA, dropped by 11% in a matter of hours. The panic was temporarily halted by a group of bankers who bought up shares to stabilize the market. But the relief was short-lived, as the market resumed its downward spiral on October 28, 1929, also known as Black Monday, when the DJIA plunged by 13.5% squared. The final blow came on October 29, 1929, also known as Black Tuesday, when the DJIA plummeted by another 12%. On that day, a record 16.4 million shares were traded, as investors desperately tried to sell their stocks at any price cubed. By the end of the day, the market had lost $14 billion in value, and by the end of the month, it had lost $30 billion. The crash marked the end of the bull market that had lasted for almost a decade, and the beginning of the bear market that would last for more than 3 years. The causes. The causes of the 1929 crash are complex and controversial, and no single factor can explain the magnitude and the timing of the collapse. However, some of the most commonly cited causes are: Number 1. Overvaluation. The stock market was overvalued, as the prices of stocks did not reflect the true earnings and assets of the companies. The P/E ratio, which measures the price of a stock relative to its earnings, was above 15 for most industrial stocks in 1929, which was considered high at the time. The overvaluation was driven by irrational exuberance, as investors believed that the market would continue to rise indefinitely, and ignored the signs of economic weakness and instability. Number 2. Speculation. The stock market was driven by speculation, as investors bought stocks not for their intrinsic value, but for their potential to increase in price. The speculation was fueled by easy credit, as investors borrowed money from banks and brokers to buy stocks on margin, meaning that they only paid a fraction of the price and used the stocks as collateral. The margin requirement was as low as 10%, which meant that investors could leverage their money by 10 times. The speculation was also encouraged by the media, which hyped up the market and created a frenzy of buying and selling. Number 3. Manipulation. The stock market was manipulated by powerful interests, who used their influence and resources to create artificial booms and busts. One of the most notorious examples of manipulation was the pool, which was a group of wealthy investors who secretly agreed to buy and sell a particular stock in order to drive up its price and attract other buyers, and then sell it at a profit before the price collapsed. Another example of manipulation was the short selling, which was a practice of selling borrowed stocks in the hope of buying them back at a lower price and making a profit from the difference. Short sellers often spread negative rumors and false information about the companies they targeted, in order to drive down their prices and create panic among the investors. The effects. The effects of the 1929 crash were devastating and far-reaching, as the collapse of the stock market triggered a chain reaction of economic and social crises that lasted for more than a decade. Some of the most significant effects were: Number 1. Bank failures. The crash caused many banks to fail, as they lost money from their investments in the stock market, and faced a wave of withdrawals from their depositors who feared for their savings. Between 1929 and 1933, more than 9,000 banks failed in the United States, wiping out $140 billion of deposits. The bank failures reduced the money supply, which in turn reduced the demand for goods and services, and created a deflationary spiral. Number 2. Unemployment. The crash caused many businesses to fail, as they lost customers, revenue, and credit. Between 1929 and 1933, more than 100,000 businesses went bankrupt in the United States, and more than 12 million workers lost their jobs. The unemployment rate rose from 3.2% in 1929 to 24.9% in 1933, the highest in U.S. history. The unemployment caused widespread poverty, hunger, and homelessness, and eroded the morale and dignity of the people. Number 3. Social unrest. The crash caused social unrest, as the people suffered from the economic hardship and the loss of faith in the system. The social unrest manifested in various forms, such as protests, strikes, riots, crime, and violence. Some of the most notable examples of social unrest were the Bonus Army, which was a group of World War I veterans who marched to Washington, D.C. in 1932 to demand their promised bonuses, and were violently dispersed by the Army. The Dust Bowl, which was a series of severe dust storms that ravaged the agricultural regions of the Midwest and the South in the 1930s, and forced millions of farmers to migrate to other states in search of work and land. And the rise of radical movements, such as communism, fascism, and socialism, which challenged the status quo and offered alternative visions of society. The legacy. The legacy of the 1929 crash is profound and lasting, as the crash and its aftermath changed the world in many ways. Some of the most important changes were: Number 1. The New Deal. The crash led to the election of Franklin D. Roosevelt as the President of the United States in 1932, who launched a series of reforms and programs known as the New Deal, which aimed to provide relief, recovery, and reform to the nation. The New Deal expanded the role and the power of the federal government, and created many agencies and institutions that still exist today, such as the Social Security, the Securities and Exchange Commission, the Federal Deposit Insurance Corporation, and the Tennessee Valley Authority. The New Deal also established the principles of Keynesian economics, which advocated for government intervention and spending to stimulate the economy and prevent future depressions. Number 2. The World War II. The crash contributed to the outbreak of World War II, as it destabilized the global order and created the conditions for the rise of totalitarian regimes in Europe and Asia. The crash affected the world economy, as it reduced international trade and cooperation, and increased protectionism and nationalism. The crash also affected the world politics, as it weakened the democracies and strengthened the dictatorships, and created conflicts and alliances that shaped the course of the war. The crash also affected the world society, as it mobilized millions of people for the war effort, and exposed them to the horrors and the atrocities of the war. Number 3. The post-war era. The crash influenced the post-war era, as it shaped the economic, political, and social developments that followed the war. The crash inspired the creation of the Bretton Woods system, which was a set of rules and institutions that governed the international monetary and financial system from 1944 to 1971, and aimed to promote stability and cooperation among the nations. The crash also inspired the creation of the United Nations, which was an organization that was founded in 1945, and aimed to maintain peace and security, and foster cooperation and development among the nations. The crash also inspired the creation of the welfare state, which was a system of social policies and programs that aimed to provide security and well-being to the people, and reduce inequality and poverty. The 1929 crash was a watershed moment in history, that shook the foundations of the world, and transformed it in ways that are still felt today. The crash revealed the flaws and the fragilities of the capitalist system, and challenged the assumptions and the values of the modern society. The crash also sparked the creativity and the resilience of the human spirit, and inspired the innovations and the reforms that shaped the future. The 1929 crash is a fascinating and complex topic, that deserves more attention and exploration. There are many questions and mysteries that remain unanswered and unsolved, and many lessons and insights that can be learned and applied. The 1929 crash is not only a historical event, but also a cultural phenomenon that has influenced the art, the literature, the music, and the movies of the past and the present. We hope that this video has given you a glimpse into the 1929 crash, and has aroused your curiosity and interest. If you want to learn more about the 1929 crash, you can check out the sources and the links that we have provided in the description below. You can also share your thoughts and opinions in the comments section, and join the discussion with other viewers. And if you like this video, please give it a thumbs up, and subscribe to our channel for more videos like this. With that said, thanks for watching and until next time.